E-commerce news today. 10 major developments reshaping online retail. Disclaimer. The information provided is for news and informational purposes only. None of the content below is financial, medical, or official advice. Readers and viewers should not consider the report's analysis or any anecdotal stories as professional advice or as guidance for personal decisions. 1. Global e-commerce market reaches new heights. The global e-commerce industry accounting for roughly one-fifth of all retail purchases worldwide. This growth is fueled by increased internet penetration, mobile phone usage, and digital payment adoption, bringing convenient shopping to billions of people. Mobile commerce has surged, with more than two-thirds of online purchases now made on smartphones and over half of all digital transactions completed via mobile wallets. Developing markets in Asia, Latin America, and Africa are showing particularly strong e-commerce growth, as a rising middle class and better infrastructure come online. The e-commerce boom has encouraged retailers of all sizes to invest in digital strategies and cross-border sales, making online platforms an increasingly central part of the global retail landscape. Investors have taken note as well. E-commerce companies worldwide have seen their valuations climb as they tap into this sustained online shopping wave. E-commerce companies are also navigating a dynamic global economic landscape while managing fast-changing consumer behaviors. The industry's expansion was accelerated by the pandemic and has solidified as more consumers rely on home delivery and digital services. Even amid inflation and changing post-pandemic habits, consumers continue to favor online channels for convenience and variety, pushing retailers to adapt swiftly. Digital marketplaces are thriving, accounting for a growing share of overall online sales, and traditional retailers are embracing e-commerce to avoid being left behind. Meanwhile, emerging technologies like AI-driven personalization and improved supply chains have enhanced customer experiences, further boosting trust and repeat purchases across the globe. Market analysts note that the e-commerce surge is shifting retail stock market dynamics, with online-focused retail indexes outperforming broader consumer market indices in recent quarters as investors bet on long-term digital commerce growth. Global competition in e-commerce is intensifying, with major players vying for market share across borders. Companies such as Amazon and Alibaba are expanding into new territories while regional champions in Southeast Asia, Europe, and Africa are scaling up their operations to compete. Governments and trade blocs are paying attention, balancing the benefits of digital commerce growth with calls for regulation and fair competition. The result is a worldwide race to modernize trade rules, as seen with the first global agreement on e-commerce under the World Trade Organization's umbrella. Despite occasional geopolitical tensions and supply chain disruptions, the sector's robust growth persists, solidifying the role of e-commerce as a key driver of economic activity and consumer spending in today's global market. Legal and regulatory developments. Global e-commerce. International E-commerce Pact. A coalition of major trading nations has forged an interim agreement under the World Trade Organization to establish the first global rules on e-commerce. This pact aims to standardize digital trade practices by addressing issues like electronic transactions, e-signatures, and a ban on customs duties for digital transmissions across borders. The deal, stabilized last year by 82 WTO members, seeks to boost cross-border online commerce, but must overcome hurdles before full implementation. With some countries yet to sign on, the agreement's ultimate adoption into the global trade framework remains uncertain. Nonetheless, it represents a significant step toward reducing regulatory fragmentation in digital trade and easing barriers for e-commerce businesses worldwide. Global industry groups have welcomed the accord's focus on facilitating international online transactions and enhancing consumer trust in digital marketplaces. If fully enacted, it could strengthen the legal foundation for sustained cross-border e-commerce expansion. Cross-border data protection. Countries around the world are tightening data protection and privacy laws that affect e-commerce operations. As digital transactions proliferate globally, regulations like Europe's General Data Protection Regulation, GDPR, and new data localization rules in countries such as India and China impose stricter requirements on how online retailers collect, store, and transfer consumer data across borders. Compliance has become a critical focus for global e-commerce firms, which must invest heavily in data security and adapt their practices to different regulatory regimes. Many nations are collaborating on interoperable frameworks for data flow, balancing the need for innovation in cross-border e-commerce with ensuring consumer privacy and national security. Global taxation and customs rules. International tax policies and customs regulations are evolving to adapt to the e-commerce boom. Governments are increasingly implementing digital services taxes and adjusting tariff regimes to capture revenue from online sales and ensure fairness between domestic and foreign sellers. The European Union and other jurisdictions have introduced streamlined VAT collection systems for cross-border e-commerce, making online marketplaces responsible for collecting and remitting taxes on sales. Meanwhile, customs agencies worldwide are modernizing import duty processes, including lowering thresholds for duty-free imports to address the surge in small parcels from abroad. These legal shifts require e-commerce companies to closely monitor and adjust to new compliance obligations in every market they serve, ensuring they correctly handle duties, tariffs, and tax collection in global online transactions. Consumer protection in online retail. Regulators globally are bolstering consumer protection laws to address the unique challenges of e-commerce. New regulations enforce clear disclosure of pricing, fees, and business details on websites to protect shoppers from hidden costs or fraudulent sellers. Product liability rules are being updated to make e-commerce marketplaces more accountable for unsafe products sold on their platforms, meaning companies must vet third-party sellers and their goods or face penalties if harmful items reach consumers. Many jurisdictions now also mandate straightforward return and refund policies for online purchases, reinforcing consumer rights in the digital realm. These efforts aim to build trust in e-commerce by ensuring shoppers enjoy the same protections online as they do in brick-and-mortar stores. Intellectual property and counterfeit goods. With global e-commerce rise, enforcement of intellectual property laws online has become a priority. Authorities in the US, Europe, and China are increasing pressure on e-commerce platforms to crack down on counterfeit products and trademark infringements. New legal measures require platforms to swiftly remove listings for fake goods and proactively vet high-risk sellers, with hefty fines or legal action for non-compliance. International collaboration is also growing. Agencies are sharing information across borders to disrupt networks trading counterfeit merchandise through online marketplaces. These legal efforts force e-commerce companies to allocate more resources to brand protection and authentication processes, all aiming to ensure that consumers receive genuine, safe products when they shop online. Labor laws in the digital economy. The spread of e-commerce has drawn attention to labor practices in global supply chains and fulfillment operations. Labor regulators worldwide are scrutinizing working conditions in warehouses and logistics centers, with some regions introducing stricter standards for workers' hours, rest breaks, and safety protocols. In the gig economy, new laws and court decisions are testing whether independent delivery couriers and drivers should be classed as employees with full labor protections or remain contractors. Countries in Europe and states in the US are debating legislation to extend minimum wage, benefits, and unions' rights to e-commerce, frontline, and gig economy workers. These evolving labor regulations mean e-commerce businesses must balance efficiency with compliance and ethical employment practices, facing potential legal repercussions if they fall short. Antitrust and market competition. The competitive dominance of large e-commerce platforms has sparked antitrust investigations around the world. Regulators in the US, Europe, and other regions are examining whether digital marketplaces have engaged in anti-competitive behavior, such as favoring their own products or blocking new entrants. In some cases, authorities have imposed fines or mandated changes to ensure fair competition, while others are exploring new frameworks for oversight of gatekeeper platforms. These legal actions reflect a growing trend of governments proactively managing the market power of e-commerce giants, aiming to foster a level playing field for smaller online merchants and startups. The outcome of these cases and potential new antitrust laws will shape how e-commerce markets operate and how major players conduct business globally. 2. Amazon's e-commerce evolution and industry impact. Amazon, the world's largest e-commerce company, continues to redefine the online retail landscape through strategic innovation and aggressive expansion. In its latest earnings announcement, Amazon's net sales surged by 13% year-over-year to $143.3 billion, significantly exceeding analyst expectations. The company's profitability soared as well, with first-quarter operating income more than doubling to $15.3 billion, a result of cost-cutting efforts and robust growth in high-margin segments like cloud services and advertising. Amazon's share price jumped in after-hours trading following these results, reflecting investor optimism about its strategic direction and financial strength. Meanwhile, Amazon is investing in faster shipping and new products. Its Prime membership base continues to expand, and the company recently introduced new AI-driven features to make shopping more personalized. These developments underscore Amazon's pivotal role in e-commerce and technology, often setting industry standards that other retailers strive to match. The competitive landscape in American e-commerce is evolving around Amazon's outsized influence. Big-box retailers like Walmart and Target have ramped up their online capabilities, leveraging their brick-and-mortar networks to challenge Amazon's dominance in key categories. Walmart, for instance, has seen its own robust e-commerce growth alongside Amazon, expanding curbside pickup and next-day delivery to a broad range of products. Amazon's third-party marketplace also continues to flourish, now contributing more than half of units sold, as millions of independent sellers worldwide leverage the platform to reach customers. However, Amazon's scale and practices are also drawing scrutiny. Competitors and sellers sometimes raise concerns over how the company's vast ecosystem may undercut rivals. To maintain its leadership, Amazon is diversifying, investing in areas beyond retail, such as grocery, healthcare, and entertainment. This all-encompassing approach consolidates its position in the market, but also raises questions about how much control a single company should wield in e-commerce and adjacent sectors. Amazon's evolution comes with both opportunities and challenges on the legal and public policy fronts. U.S. regulators have launched a landmark antitrust lawsuit against Amazon, alleging that some of its business practices, from pricing policies to marketplace rules, unfairly preserve a retail monopoly at the expense of competition. The company firmly denies any wrongdoing, arguing that its innovations benefit consumers and sellers, and the case is on track for a major trial next year that could shape the future of digital commerce oversight. Simultaneously, Amazon faces persistent labor disputes and unionization efforts in its warehouses and logistics centers, as workers push for better conditions and representation. The company has also navigated regulatory challenges around privacy, data use, and product safety, implementing new measures to verify third-party sellers and secure user data. For investors, Amazon's ability to manage these challenges while maintaining growth is crucial. The company's performance not only influences its own stock, but often signals trends for the broader e-commerce sector and financial markets. Legal and regulatory developments. Amazon and U.S. e-commerce. Antitrust lawsuit against Amazon. U.S. authorities have intensified antitrust scrutiny of Amazon's dominance in e-commerce. The Federal Trade Commission, FTC, together with dozens of states, filed a landmark lawsuit accusing Amazon of using exclusionary tactics, from restrictive seller policies to algorithmic manipulation of its buy box, to illegally maintain monopoly power in online retail. Amazon rejects these claims and is preparing for a courtroom battle that could reshape antitrust enforcement for big tech, with a trial set for early next year. If the government prevails, potential remedies could include major changes to Amazon's business practices or even structural separations of its divisions. The case reflects a broader wave of regulatory efforts to rein in technology and e-commerce giants for the sake of competitive markets. Marketplace fairness and seller rights. Legal pressure is growing to ensure fair treatment of third-party sellers on large e-commerce platforms. Proposed U.S. legislation and enforcement actions aim to prevent practices like self-preferencing, where a marketplace operator might unfairly promote its own brands over independent merchants. Amazon has already made adjustments in response to regulatory inquiries, such as easing restrictions on pricing parity that prevented sellers from offering lower prices elsewhere. New rules also require online marketplaces to vet high-volume sellers, as with the Informed Consumers Act, to combat counterfeit goods and stolen merchandise, increasing accountability for items sold on the platform. Collectively, these measures strengthen legal protections for smaller sellers and foster a more level playing field in the digital marketplaces dominated by companies like Amazon. Labor and unionization efforts. E-commerce companies face legal battles over labor practices and workers' rights. Amazon, with hundreds of thousands of fulfillment center employees, has been a flashpoint for the broader debate on warehouse working conditions and the rights of gig economy delivery drivers. While one Amazon warehouse made history by voting to unionize in 2022, the company has yet to agree to a first contract at that facility and has faced strikes and legal challenges over its anti-union stance. Regulators and lawmakers are watching these developments closely, considering adjustments to labor laws that would facilitate collective bargaining in the e-commerce sector. The outcomes of these disputes could set precedents for worker organization and labor standards across the industry. Consumer data privacy and cybersecurity. With vast amounts of consumer data flowing through e-commerce platforms, privacy regulations and data security standards are paramount. Laws in California and other states have expanded consumer data privacy rights, similar to Europe's GDPR, requiring e-commerce companies like Amazon to allow users more control over their personal information. Amazon and its peers must provide clear privacy notices and easy opt-outs for data collection or targeted advertising, or they risk fines and lawsuits. There's also increased legal accountability for data breaches. If an e-commerce platform fails to adequately protect user data, it could face regulatory penalties and civil litigation. This evolving legal landscape pushes large e-commerce firms to invest in rigorous cybersecurity measures and transparent data practices. Product safety and liability. The online retail sector is under pressure to ensure the safety and authenticity of products sold on its platforms. Several U.S. states have considered or enacted laws that could hold e-commerce marketplaces liable for defective products sold by third-party vendors. Amazon has already updated its policies to offer additional protections, including direct refunds for products that cause property damage or injury, even if sold by independent sellers. Meanwhile, the Consumer Product Safety Commission and state attorneys general are scrutinizing online retailers' processes for recalling dangerous items and preventing banned products from being listed. The tightening legal stance means e-commerce companies must bolster their oversight of marketplace listings to avoid lawsuits and reputational damage. Digital sales tax compliance. After years of debate, online sales tax collection in the U.S. is largely standardized, ensuring e-commerce retailers collect state sales taxes on internet purchases just as physical stores do. The Supreme Court's 2018 South Dakota versus Wayfair decision allowed states to require out-of-state online sellers to collect sales tax, and since then, nearly all states have implemented such rules. This legal development has leveled the playing field between online and offline commerce, removing the tax advantage that e-commerce companies once held and simplifying compliance for national online retailers. Amazon and other major players have long since integrated tax calculation systems to adhere to each state's requirements, demonstrating how swiftly e-commerce firms must adjust to regulatory changes. Future of platform regulation. U.S. legislators are debating new frameworks to address the influence of large digital platforms on commerce and information flow. Proposals such as the American Innovation and Choice Online Act, under consideration in Congress, would bar dominant e-commerce platforms from biasing search results in favor of their own products or services. These initiatives, though yet to become law, signal a bipartisan concern about the power of tech giants. Going forward, e-commerce companies must stay vigilant of potential legislative shifts that could impose further constraints on how they leverage their ecosystems, from app stores to cloud services, in relation to their e-commerce operations. The trajectory of these policies will determine how the next generation of tech-driven retailers compete and collaborate. 3. Chinese e-commerce titans reshape strategies post-crackdown. China's e-commerce giants are undergoing significant transformations as they rebound from a period of intense regulatory scrutiny at home. Alibaba, one of China's flagship tech companies, recently signaled a strategic comeback, reporting improved growth after facing years of government crackdowns and economic headwinds. The company has pursued a sweeping restructuring, splitting into several semi-independent units spanning e-commerce, cloud computing, logistics, and media, to become more agile and appease regulators wary of concentrated power. Alibaba's core e-commerce business has stabilized with modest revenue gains of around 8% annual growth, and it has resumed plans to list some of its subsidiaries publicly once conditions allow. Rival JD.com and other major players like Pinduoduo are also adapting, redoubling their focus on technology and international expansion to reignite growth amid a more supportive policy environment. Beijing appears to be gradually easing the tight regulatory controls that had weighed on its tech sector since 2020. After seeing hundreds of billions of dollars erased from Chinese tech market values at the height of the crackdown, authorities are signaling a pivot towards balanced development, encouraging innovation and global competitiveness while maintaining oversight. Alibaba's renewed momentum has been buoyed by heavy investments in artificial intelligence and cloud services, which the company views as key to its future. Meanwhile, Chinese e-commerce upstarts like Pinduoduo's overseas platform Temu and fashion retailer Shine are capturing international markets, intensifying competition for established firms. Investors are cautiously optimistic that the worst of China's tech crackdown is over. Alibaba's share price has recovered some lost ground after its value plunged by over $400 billion from its peak during the regulatory storm. The result is a fast-changing Chinese e-commerce landscape that is simultaneously managing domestic reforms and aggressive global expansion. China's e-commerce giants are also facing new kinds of challenges as they advance. Domestically, they are contending with moderate economic growth and frugal consumer sentiment, which have put pressure on sales. Internationally, they must compete with Western rivals and navigate geopolitical tensions, from U.S. trade restrictions to local market barriers, while complying with various regulations abroad. To adapt, companies like Alibaba are prioritizing compliance and transparency, conducting antitrust compliance overhauls, and cooperating on data regulations to build trust with regulators. Simultaneously, they're forging partnerships and tailoring offerings to local tastes in target regions such as Southeast Asia, Europe, and the Middle East. By balancing regulatory compliance with innovation, for example, Alibaba's embrace of AI technologies to improve services, Chinese e-commerce leaders aim to sustain their growth and influence globally, even as they operate under closer watch at home. Legal and regulatory developments, China and global e-commerce. Antitrust and tech crackdown in China. In the wake of a multi-year regulatory crackdown on technology firms, Chinese authorities have imposed stricter antitrust compliance on e-commerce giants. Alibaba was hit with a record nearly $3 billion antitrust fine in 2021 amid allegations of monopolistic practices, and since then the company, along with peers like Meituan and Tencent, conducted internal overhauls to meet new competition rules. Today, China's market regulator has signaled the crackdown is winding down, but the government continues to monitor platform companies to prevent anti-competitive behavior. New antitrust guidelines encourage fair opportunities for smaller businesses on major online platforms, and authorities reserve the right to break up companies if needed to protect competition. This regulatory reset has forced China's e-commerce companies to restructure their business lines and governance, but it also provides a more stable foundation for innovation going forward under clearer rules. Data security and privacy laws in China. The Chinese government has enacted comprehensive data security and personal information protection laws that strongly impact e-commerce operations. The Personal Information Protection Law, PPL, and Data Security Law, both recently implemented, impose stringent requirements on how e-commerce firms collect, use, and store customer data domestically and when transferring data abroad. Companies must now localize sensitive personal data within China and undergo security assessments for cross-border data transfers. These laws, aimed at protecting user privacy and national security, require e-commerce platforms to redesign data handling processes and ensure transparency in user consent. Compliance has become paramount, with heavy penalties and potential business suspensions at stake for breaches. As Chinese e-commerce firms expand globally, they must juggle these domestic data obligations with international privacy regulations like GDPR, navigating complex multi-jurisdictional compliance landscapes. Intellectual property enforcement. Chinese e-commerce platforms are strengthening intellectual property, IP, protections under both domestic pressure and international scrutiny. In response to persistent concerns about counterfeit goods, China has toughened its e-commerce law enforcement and increased penalties for sellers of fake products. Platforms like Alibaba's Taobao and JD.com have implemented advanced systems and larger teams to detect and remove IP-infringing listings, responding to US and European demands for action. Meanwhile, Chinese firms have also found themselves as plaintiffs in IP disputes overseas, such as Shine's recent legal action against competitor Temu in a London court over alleged industrial-scale copying of product images. These legal battles highlight how protecting intellectual property is a two-way street in global e-commerce, with Chinese companies both accused of IP lapses and seeking to defend their own innovations and content. Global trade and tariff policies. Shifting trade policies and tariffs are influencing how Chinese e-commerce players operate internationally. The U.S. has moved to tighten de minimis import rules that previously allowed companies like Shine and Temu to ship low-cost packages directly to American consumers without duties. New rules are closing this loophole, raising compliance costs for cross-border e-commerce shipments and pushing Chinese sellers to explore local warehousing or alternative logistics strategies. At the same time, trade agreements in Asia, such as the Regional Comprehensive Economic Partnership, RCEP, are encouraging intra-Asian e-commerce by reducing tariffs and simplifying customs procedures among signatory nations. Chinese e-commerce platforms find themselves adapting to a complex mix of protectionist measures and liberalizing deals, which will shape their global supply chain strategies and pricing models. Consumer protection in China's e-commerce. Chinese regulators are enhancing consumer protection laws for online shopping as the sector matures. The government has updated its e-commerce law to enforce more responsibility on platforms for issues like counterfeit prevention, dispute resolution, and truthful advertising. Companies must provide clear contact points for consumer complaints, and they're required to promptly address issues such as false advertising or substandard goods. Penalties and publicized blacklists now await those found guilty of cheating customers. Additionally, China's new personal information protection law directly benefits consumers by tightening how e-commerce businesses can handle customer data, granting people rights to their data and potential legal recourse if companies misuse personal information. These measures aim to boost domestic consumer confidence in online transactions by ensuring fair play and accountability. Global market access and geopolitics. Chinese e-commerce firms must navigate an increasingly complex geopolitical landscape that influences their business operations abroad. Foreign investment reviews and national security checks, such as the U.S. CFIUS processes and India's earlier restrictions on Chinese apps, can affect Chinese platforms' ability to invest in or access certain markets. Companies like Alibaba have sought dual primary listings in Hong Kong and New York to hedge against geopolitical risk, while others like Shine have adjusted IPO plans amid foreign scrutiny. Trade tensions between major economies also loom over these firms. For example, U.S. legislation targeting Chinese tech and retail companies could restrict their expansion or require greater transparency in areas like sourcing, as seen with U.S. bans on products linked to forced labor. The evolving legal tenor underscores that Chinese e-commerce giants must incorporate global regulatory diplomacy into their growth strategies. Internet governance and censorship. Operating at the intersection of commerce and content, Chinese e-commerce platforms also grapple with censorship and content regulations. Live-stream shopping and social commerce features on Chinese apps are subject to content rules and real-name verification requirements to prevent illicit or misleading sales. Regulations introduced in China require platforms to monitor user-generated content, like live sales pitches, to ensure they don't violate advertising or decency standards. Non-compliance can result in fines or suspension of streaming privileges. These legal expectations reflect how the Chinese government extends its internet governance to all digital domains, including commerce. For Chinese e-commerce companies expanding abroad, reconciling domestic content control with more open internet norms overseas adds yet another layer of regulatory complexity. 4. Europe tightens e-commerce regulations. European regulators are implementing sweeping new digital marketplace rules designed to foster fair competition and protect consumers, a move with significant implications for e-commerce companies. The European Union's landmark Digital Markets Act, DMA, and Digital Services Act, DSA, have now come into force, targeting big tech and large online platforms. The DMA, fully enforceable since last year, identifies gatekeeper platforms, including major e-commerce and social media firms, and prohibits anti-competitive practices like self-preferencing of a platform's own products and services. Meanwhile, the DSA introduces strict content moderation and user safety obligations, requiring e-commerce platforms and online marketplaces to better police illegal products and protect consumers from fraud and harmful content. These regulations carry hefty fines for non-compliance, up to 10% of global revenue for the most serious breaches, compelling companies like Amazon, Google, and Meta to adjust their European operations and compliance regimes. The new EU e-commerce regulatory environment is reshaping how tech-driven retailers do business on the continent. Large e-commerce firms have been updating their policies and technology to align with the rules. For example, ensuring more transparency in how search rankings are determined, to comply with anti-self-preferencing rules, and giving business users access to data collected on their own products and customers. The DSA mandates better systems for flagging and swiftly removing illegal goods, such as dangerous products or counterfeit items, from online marketplaces. European consumers and small businesses are already seeing changes. They gain more visibility into platform algorithms and advertising practices and can expect safer online shopping as marketplaces become legally obliged to vet third-party sellers and the products they list. The tighter regulations may also influence investor sentiment. Some worry about increased compliance costs for the biggest platforms, potentially squeezing margins, while others see the long-term benefit of a more trustworthy and competitive e-commerce ecosystem, which could encourage innovation and new entrants. Europe's regulatory stance is part of a broader international trend of digital oversight, but the EU's rules are among the most far-reaching. These laws not only affect European ventures, but also any global e-commerce company operating in the region, essentially exporting EU's regulatory standards worldwide. In response, tech giants have engaged with EU authorities, sometimes pushing back or seeking clarifications on the rules. For example, there have been debates on how strictly to interpret gatekeeper obligations under the DMA and on the details of implementing the DSA's requirements for content moderation and advertising transparency. With regulatory investigations and enforcement actions expected if companies falter, and with additional initiatives like an AI Act on the horizon, the European e-commerce field is entering a new era of compliance-driven competition. Companies that adapt effectively might find opportunities in a marketplace that values fairness and consumer protection, while those that misstep could face significant penalties. Legal and regulatory developments. European e-commerce. Digital Markets Act, DMA, enforcement. The Digital Markets Act is now in effect, fundamentally altering how large online platforms must operate in Europe. Under the DMA, designated gatekeeper companies, those with significant impact on the EU market, are barred from practices such as favoring their own products or services over third-party rivals and are required to ensure interoperability with other services. The European Commission has named multiple tech giants, including major e-commerce marketplace operators, as gatekeepers and set compliance deadlines that have now passed. Companies found in violation can incur fines up to 10% of their global turnover, and repeated infringement could lead to breakup orders. This strong stance signals Europe's commitment to curbing anti-competitive behavior by digital monopolies and has prompted worldwide discussions on regulating online platforms. Digital Services Act, DSA, obligations. The Digital Services Act, which took effect last year, imposes comprehensive duties on digital service providers to increase online safety and accountability. E-commerce platforms must implement measures to swiftly remove illegal products, from dangerous goods to counterfeit items, once notified, and they must provide transparent reporting on their content moderation practices. Advertisements targeting minors or using sensitive personal data are severely restricted. Very large online platforms, VLOPs, with over 45 million users face additional audits and risk mitigation requirements. The DSA has led e-commerce marketplaces to strengthen their seller vetting procedures and customer support processes to address complaints. The law sets a new global benchmark for regulating online content and commerce, inspiring other countries to consider similar rules. Product Safety and Compliance. GPSR Europe's new General Product Safety Regulation, GPSR, extends higher safety standards to e-commerce channels. Effective from the end of last year, this regulation updates the previous safety directives and holds online marketplaces and fulfillment service providers directly responsible for the safety of products sold on their platforms. Marketplace operators must now have systems to verify that consumer products sold by third parties meet EU safety standards and must cooperate with authorities to remove any unsafe or non-compliant goods swiftly. The GPSR also grants regulators more power to order takedowns of dangerous products and requires clear channels for consumer notifications. This legal development means e-commerce companies face increased compliance duties akin to traditional retailers when it comes to product safety, bridging the regulatory gap between online and offline commerce. Consumer rights and returns. European consumers enjoy strong protections for online purchases under laws like the Consumer Rights Directive, which continues to evolve. Recent updates ensure even more transparency in online transactions, requiring that all charges, subscription terms, and personalization-based pricing are clearly disclosed at checkout. Additionally, these regulations guarantee a 14-day no-questions-asked return period for most online purchases within the EU, cementing a customer's right to cancel and return items bought online for a full refund. E-commerce businesses must provide easy-to-use return processes and reimbursements promptly by law. Failure to comply can result in enforcement actions or fines by national consumer protection agencies. The focus on robust consumer rights has helped build trust in online shopping across Europe, encouraging more people to engage in e-commerce. Data privacy compliance. GDPR and e-privacy. The EU's General Data Protection Regulation, GDPR, remains a central piece of privacy law affecting e-commerce operations. Companies selling to EU customers must gather consent for personal data usage, whether for targeted ads or newsletter communications, and provide options to access or delete personal data upon request. Data breaches must be reported within 72 hours, with steep penalties for non-compliance, up to 4% of global turnover. Moreover, the upcoming e-privacy regulation, still under negotiation, could add further rules on online tracking cookies and electronic communications. E-commerce companies have been compelled to adjust their data policies and technologies, like cookie consent mechanisms, to meet these European standards, often applying them worldwide for consistency. The EU's proactive enforcement of GDPR with large fines has signaled that even e-commerce titans must prioritize user privacy or face substantial legal and financial consequences. Competition in e-commerce markets. European competition watchdogs are closely monitoring market consolidation in online retail. Merger reviews have blocked or conditioned various acquisitions involving e-commerce platforms, especially if they threaten to stifle competition or innovation. For example, proposed deals where e-commerce giants try to absorb potential rivals can face intense scrutiny and sometimes be prohibited. The UK's Competition and Markets Authority, CMA, and the European Commission have also launched sector inquiries into digital markets to assess if further regulatory interventions are needed. Europe's vigilant approach to e-commerce competition ensures that even as the sector grows, established companies cannot easily squelch competition via acquisitions or predatory practices. This legal stance supports a diverse market where consumers have multiple viable online shopping options. Payments and financial regulations. E-commerce in Europe is touched by evolving financial regulations that affect online transactions. The revised Payment Services Directive, PSD2, enforces strong customer authentication for online payments, requiring two-factor verification for most e-commerce transactions to combat fraud. Additionally, European authorities are monitoring the burgeoning Buy Now, Pay Later (BNPL) services associated with e-commerce, considering new regulations to ensure consumer credit is offered responsibly and transparently. As e-commerce platforms increasingly integrate payment services or digital wallets, they also fall under financial compliance obligations such as anti-money laundering requirements and strict handling of customer payment data. These financial and payments regulations add another layer of legal compliance that e-commerce companies must manage to operate smoothly in the European market. 5. Social commerce and influencer-driven shopping booms. Social media platforms are rapidly becoming retail powerhouses as social commerce continues to boom, blending content and shopping into a seamless experience. The short video app TikTok, for example, has aggressively expanded its in-app shopping features, TikTok Shop, and now contributes nearly 20% of all social commerce sales. Industry forecasts project that social commerce sales will exceed $100 billion next year, up from around $87 billion this year, as more consumers shop directly through social media content. On TikTok, half of U.S. social shoppers are expected to make at least one purchase via the platform in the near term. Other social networks are racing to keep up. Instagram, Facebook, and YouTube have all introduced enhanced shopping tools, from integrated storefronts to live shopping streams, enabling users to buy products as they engage with posts and videos. The result is a new era of interactive, influencer-driven shopping, where entertainment and retail converge. This trend is reshaping marketing and e-commerce strategies. Brands, from fashion labels to consumer electronics makers, are investing in influencer partnerships and shoppable content to capture the attention of online audiences. Authentic recommendations by popular creators can translate quickly into sales, as consumers often trust influencers' product endorsements and demonstrations. For example, beauty and apparel companies routinely launch products via influencer live streams or TikTok challenges, driving rapid sellouts and trending viral products. Retailers are also joining the fray. Major e-commerce platforms now offer tools for small businesses to easily create social media store integrations and video content that reach new customers. This democratization of retail marketing has particularly benefited direct-to-consumer brands, which can now find nationwide audiences without traditional brick-and-mortar presence. E-commerce companies that effectively harness social commerce can see increased traffic and conversion rates, giving them a competitive edge in a digital-first marketplace. The rapid rise of social commerce is attracting a mix of excitement and caution from the business community. Investors and advertisers are closely watching the monetization potential of social platforms, which are increasingly reliant on commerce to fuel revenue growth. Tech companies with strong social commerce strategies have seen their stock valuations improve, reflecting expectations of new income streams from in-app sales and advertising. However, social commerce also raises new challenges. Managing customer service and returns through social apps, ensuring payment security, and dealing with fraud or counterfeit concerns on user-generated storefronts. To address this, platforms like Facebook and Instagram have refined their seller verification processes and purchase protection policies, reassuring users that buying through a social feed can be as safe as traditional e-commerce. If these hurdles are overcome, the integration of social networking and shopping is poised to become a permanent and major pillar of the e-commerce industry. Legal and regulatory developments, social commerce. Influencer advertising regulations. As influencer-driven shopping grows, regulators are enforcing truth in advertising laws on social media. Authorities like the U.S. Federal Trade Commission, FTC, and the UK's Advertising Standards Authority require influencers to clearly disclose paid promotions and sponsorships in their posts. Social platforms now provide tools, such as paid partnership tags, to ensure compliance. Failure to label endorsements appropriately can lead to legal action or fines, as regulators aim to prevent deceptive advertising in social commerce. Brands and influencers are increasingly careful to follow these guidelines by using hashtags like #ad or #sponsored in their content. These measures seek to maintain consumer trust in influencer recommendations, a cornerstone of social commerce. Platform liability and content moderation. Legal frameworks are evolving regarding the responsibility of social platforms for e-commerce transactions facilitated through their apps. Under Europe's Digital Services Act and similar proposals elsewhere, social media companies hosting marketplace features must act against illegal products or scams sold via their platforms. This includes cooperating with authorities to remove counterfeit or dangerous goods and implementing systems for user reporting of suspicious offerings. Some jurisdictions are re-examining liability shields, like Section 230 in the U.S., to clarify that if a platform directly participates in the sale by processing payments or hosting a shop, it could share responsibility for product issues. These legal shifts encourage platforms like Facebook, Instagram, and TikTok to invest in stronger content moderation and seller verification to protect consumers. Consumer protection in social sales. Governments have been reinforcing consumer protection rules to cover purchases made via social networks and livestream sales channels. Buyers who click Shop Now on an influencer's post or live video are entitled to the same rights, such as return and refund policies, as any online purchase. Regulators are monitoring social commerce for problematic practices like misleading, limited time offers or undelivered goods sold through social media ads. In response, platform providers have introduced secure payment systems and standardized dispute resolution processes for in-app purchases. Some countries are extending their general e-commerce and consumer rights laws explicitly to cover transactions on social media, ensuring that the explosive growth of social commerce does not come at the expense of consumer trust. Data privacy and targeted marketing. Privacy laws affect social commerce, particularly because it relies heavily on personal data for targeted advertising and personalized shopping experiences. Under laws like GDPR in Europe and various state-level privacy statutes in the US, social media companies must obtain user consent and permit opt-outs for the data tracking that fuels their shopping recommendations and ad targeting. Regulatory bodies are also concerned about the massive troves of personal and behavioral data that companies like Meta and TikTok collect through social shopping features. These concerns have prompted investigations into whether data sharing between social networks and merchants aligns with privacy commitments. Compliance with robust data protection standards is now a key part of doing commerce on social platforms, impacting everything from analytics to ad campaign design. Intellectual property and counterfeit enforcement. With social commerce, IP protection and anti-counterfeiting efforts have taken on new urgency. Some popular social platforms have been criticized as emerging channels for knockoff goods to spread, as they allow thousands of small sellers to showcase products directly to consumers via images and short videos. In response, companies have rolled out new brand protection tools and partnerships with rights holders to track and remove counterfeit listings, aligning with legal obligations to respect trademarks and copyrights. High-profile enforcement actions have targeted fraudulent sellers on sites like Instagram and TikTok selling counterfeit luxury goods, culminating in lawsuits and site bans. Ensuring intellectual property compliance has become an essential legal expectation for social commerce platforms to legitimize their marketplaces. Child safety and advertising standards. Regulators are particularly vigilant about protecting children on social commerce platforms. Many social media users are minors, and laws such as the UK's Age-Appropriate Design Code and various US proposals are pressuring platforms to ensure that shopping content and advertisements are not exploiting or misleading underage users. Features like direct checkout have age restrictions, and policies prohibit targeted ads to minors in certain categories. For instance, children's privacy laws limit data collection that could be used for commercial targeting. Enforcement of these child protection rules can include steep fines or platform liability if violations occur. As social commerce grows, companies face the challenge of enabling youth-friendly content while preventing unethical marketing or data practices involving children. Global trade and localization. Social commerce blurs traditional trade lines as small vendors can sell internationally through global social platforms, prompting interest from trade authorities. Issues such as cross-border sales tax and customs compliance are coming to the fore. For example, whether merchants selling via social media need to register for overseas taxes or follow import-export regulations for shipping goods. Some jurisdictions consider agreements or guidelines to simplify these micro-exports. Additionally, local content laws, like requirements for local language and currency, may apply to shops on social platforms operating in certain countries, effectively requiring social media companies to tailor their commerce features to local regulations. These legal considerations are part of the growing pains of this new form of e-commerce, as lawmakers catch up with the reality of global social shopping. 6. AI revolutionizes the online retail experience. Artificial intelligence has become a cornerstone of modern e-commerce, revolutionizing the online shopping experience for both consumers and retailers. This week, one of the sector's biggest players took AI integration a step further. Amazon officially rebranded its AI shopping assistant Rufus as Alexa for shopping, reflecting a deeper commitment to conversational, personalized online retail. Across the industry, companies are harnessing AI and machine learning algorithms to drive product recommendations, dynamic pricing, and chat-based customer service. Shoppers now routinely encounter AI-powered features such as chatbots that provide 24/7 support, visual search tools that recognize products from photos, and personalized homepages that tailor offerings to individual browsing habits. These innovations are not just experimental add-ons. They are becoming central to how e-commerce platforms operate, improving efficiency and customer satisfaction by making online shopping more intuitive and responsive. The AI boom in e-commerce encompasses a wide range of applications, from front-end customer interactions to behind-the-scenes logistics. Retailers are using generative AI to automatically create product descriptions, marketing content, and even synthetic product imagery, thereby shortening content production cycles and enabling more dynamic merchandising. Some companies now employ AI-driven virtual stylists and shopping assistants that can parse customer preferences and answer complex queries about product fit or style in natural language. For example, an AI assistant can help a customer find a red cocktail dress with specific design features, compare options, and even place an order on the shopper's behalf, mimicking a personal shopper experience. On the operations side, machine learning is optimizing inventory management and supply chains by predicting demand surges and automating warehouse picking with robotics. This broad integration of AI is improving delivery times and inventory turnover, which translates into cost savings and higher consumer loyalty for e-commerce businesses. The transformative effect of AI on online retail has also become a significant theme in market and investor discussions. Companies that stake out leadership in AI-driven retail experiences are often rewarded with heightened market interest and investment, as many analysts view AI capabilities as a critical factor for future growth. E-commerce stocks have seen boosts in part due to AI optimism, with market leaders highlighting their AI initiatives in earnings calls to demonstrate innovation. But the AI revolution is not without its challenges. Concerns around algorithmic transparency and potential bias have emerged, and companies are working to ensure their AI tools enhance rather than undermine trust. Moreover, with more aspects of shopping experience being automated, businesses must maintain a human touch and accountability. Still, the consensus is that AI will continue to shape e-commerce profoundly, with competition increasingly defined by who can most effectively leverage data and artificial intelligence. Legal and regulatory developments. AI in e-commerce. AI transparency and accountability. Regulators are beginning to address the ways e-commerce companies employ artificial intelligence. Proposed laws, such as the EU's AI Act, may require transparency about AI-driven features. For instance, obligating e-commerce platforms to inform users when they are interacting with an AI rather than a human. This means shopping assistants or recommendation engines might need labels or disclosures. Additionally, there's a push for accountability in automated decision-making. If an AI algorithm denies someone a promotion or preferential price, regulators want companies to explain that decision. E-commerce companies need to audit their AI systems for compliance to avoid liability that could arise from non-transparent or biased AI outcomes. Data usage and privacy with AI. Artificial intelligence in retail relies heavily on big data, and so is deeply affected by privacy regulations. Laws like GDPR restrict how machine learning models can use personal customer data without explicit consent. E-commerce companies must ensure that their AI's thirst for user data doesn't run afoul of privacy rules, especially if algorithms are personalizing prices or products based on potentially sensitive data. Regulators are keen to ensure consumer data isn't exploited. New guidelines and enforcement actions could penalize retailers that use AI to engage in discriminatory pricing or violate privacy norms. As a result, many companies have set up internal review boards and bias testing for their algorithms, aligning with legal expectations of fairness and privacy. AI and consumer protection. The use of AI in e-commerce is raising novel consumer protection issues. If an AI-driven recommendation or dynamic pricing algorithm is found to mislead consumers or result in unfair price discrimination, it could attract regulatory scrutiny under existing consumer protection laws. For instance, there are discussions on whether extremely personalized pricing might violate anti-price gouging or anti-discrimination statutes if different shoppers see vastly different prices for the same item. Regulators have also noted the risk of AI chatbots unintentionally giving inaccurate or biased information about products. E-commerce companies must ensure their AI systems are tested for accuracy and fairness or face potential complaints and litigation. Intellectual property and AI-generated content. As retailers leverage AI to generate content, product descriptions, images, and even chat responses, legal questions around intellectual property have emerged. If an AI system creates a product image or ad copy by analyzing thousands of existing works, copyright holders may claim infringement if the AI inadvertently reproduces protected elements. Companies are seeking legal clarity on content ownership and liability when AI is used in creative processes. Meanwhile, some jurisdictions are exploring updates to copyright law to address AI outputs. E-commerce firms using generative AI must be careful to avoid IP infringement and may use filtering tools or curate AI content manually to ensure compliance. Automated decision-making regulations. There's a growing policy focus on how automated systems, including those used in e-commerce, make decisions that affect consumers and sellers. The EU's draft AI regulations, for example, classify certain AI systems in consumer-facing roles as high risk, requiring rigorous testing and documentation. If an e-commerce site uses AI for credit approval in BNPL, buy now, pay later, financing, or for fraud detection that could decline a customer's purchase, it might need to meet these heightened standards. Regulators in various countries might also demand that automated systems allow human review of significant decisions. E-commerce platforms will need to design their AI workflows with these requirements in mind, maintaining a human in the loop for contested cases or high-stakes outcomes. Competition and AI leadership. As AI becomes central to e-commerce success, regulators are wary that only a few large companies will control the most advanced AI tools and datasets, reinforcing their market dominance. Competition authorities are exploring whether AI-related acquisitions or alliances might raise antitrust concerns. If an e-commerce giant were to buy up numerous AI startups or lock in exclusive deals for advanced AI technology, it might attract regulatory intervention to prevent further consolidation of power. This is an emerging area where competition law and tech converge. The outcome will influence how widely AI benefits are distributed across the industry, ensuring that smaller e-commerce players also have access to cutting-edge AI innovations. Ethical AI and self-regulation. Beyond formal laws, there is an industry push for ethical guidelines in AI usage in e-commerce. Companies are voluntarily adopting principles for responsible AI, ensuring, for example, that recommendation algorithms do not inadvertently promote harmful or illegal products, or that AI chatbots do not generate offensive content. While these are not yet legally binding, they could become de facto standards and eventually inform future regulations. The combination of self-regulation and evolving legal frameworks reflects an effort to harness AI's benefits while mitigating its risks, showing that even high-tech e-commerce advancements must align with societal norms and values to achieve long-term success. 7. The omnichannel retail transformation. The lines between online and offline shopping continue to blur as traditional retailers undergo a sweeping omnichannel transformation to stay competitive in the e-commerce era. Many brick-and-mortar retailers are reinventing their operations to seamlessly integrate digital and physical experiences. This week, some large retail chains announced new initiatives, such as converting underperforming stores into localized e-commerce fulfillment centers and expanding buy online, pick up in store (BOPIS) programs across more locations. Retail giants like Walmart have reported strong e-commerce growth as they leverage their extensive store networks to support online orders, offering same-day delivery and curbside pickups in a bid to match Amazon's speed. Mall-based and department store brands are focusing on personalized shopping apps and in-store digital services to enhance customer engagement and drive foot traffic alongside online sales. These efforts reflect an urgent industry-wide push to build a cohesive omnichannel presence that meets consumer expectations for speed, convenience, and choice, regardless of shopping channel. The shift to an omnichannel model is changing how retailers manage inventory and customer service. Companies that once focused primarily on storefronts are now investing heavily in e-commerce platforms, digital marketing, and supply chain technology. Many have partnered with tech firms or acquired startups to bolster their capabilities in areas like mobile payments, virtual try-on, and last-mile delivery. This includes the adoption of advanced analytics to optimize inventory across online and offline stores, ensuring products are available when and where customers want them. The transformation isn't without challenges. Retailers must retrain staff, overhaul legacy systems, and manage the logistics of blending warehouses with retail floor space. Yet those who have successfully implemented omnichannel strategies often see improved sales, as customers appreciate the flexibility of a unified shopping experience, like being able to check store stock online, order via app, and return or exchange items either by mail or at a nearby store. Financial markets are closely watching retailers' progress on digital integration, as investors now value companies for how effectively they adapt to the e-commerce paradigm. Traditional retail chains that demonstrate a successful e-commerce strategy have been rewarded with better stock performance and investor confidence, while those that lag behind risk further declines. This trend is clear in the divergence between retailers that embraced omnichannel early versus those that did not. The former have generally maintained or grown market share, whereas the latter have faced store closures and even bankruptcies. Recognizing this, some former e-commerce pure-play companies are also opening physical outlets or partnering with established retailers to tap into the benefits of a real-world presence. The result is a retail sector where e-commerce is not viewed as separate from physical retail, but as a fundamental part of a cohesive commerce strategy. Legal and regulatory developments, omnichannel retail, mergers and acquisition oversight. The trend of brick-and-mortar retailers acquiring e-commerce startups or merging with online platforms has drawn attention from competition regulators. Authorities are scrutinizing such omnichannel M&A deals to ensure they do not harm competition, especially when a dominant player seeks to buy out an emerging online rival. In some cases, conditions are imposed on mergers to protect consumer choice, such as requiring the combined company to maintain fair access for third-party sellers or not to misuse data from acquired online businesses. This increased legal oversight means that companies pursuing an omnichannel strategy via acquisitions must be prepared to address antitrust concerns and possibly divest overlapping business lines. Sales tax and fairness laws. As physical retailers and online sellers converge, sales tax laws and economic nexus regulations have largely caught up to ensure tax fairness across channels. In many jurisdictions, e-commerce transactions now face similar tax obligations as in-store sales, eliminating the earlier advantage online-only retailers had in avoiding certain local taxes. Retailers with both online and offline operations must integrate robust tax compliance systems to account for varying state or country rules concerning digital sales and in-person sales. These evolving laws aim to level the playing field between pure e-commerce companies and those maintaining physical stores, reinforcing an environment where omnichannel strategies are not penalized or unduly advantaged from a tax perspective. Consumer experience regulations. Omnichannel retailers must comply with laws ensuring a consistent consumer experience and rights across all sales channels. For example, regulatory guidance in many countries stipulates that promotions or pricing must be the same online and in-store if advertised as such to prevent misleading marketing. Return policies have to be clearly communicated regardless of whether an item was bought online or offline, as consumer protection laws in places like the EU guarantee return rights for distance sales. Retailers are careful to craft terms and conditions that cover both channels to remain compliant and maintain customer goodwill. These uniform standards in advertising and service quality across channels are being emphasized by regulators to avoid confusion as the retail world becomes increasingly blended. Zoning and urban planning. The expansion of urban fulfillment centers and store-to-warehouse conversions by large retailers has raised local regulatory considerations. City and regional authorities are looking at zoning laws to manage the impact of large e-commerce warehouses in urban areas, balancing the economic benefits of distribution hubs with concerns about traffic, noise, and environmental impact. In certain locales, laws and community agreements may require retailers to implement specific measures, such as truck traffic restrictions or investments in local infrastructure, when repurposing retail spaces as logistics centers. As omnichannel operations intensify near residential quarters, abiding by local regulations and securing community buy-in have become part of the legal due diligence for retailers transforming their store footprint. Data and privacy across channels. Integrated online-offline shopping means retailers are collecting data across various touchpoints, so privacy regulations are key. Laws like GDPR in Europe and state privacy laws in the US mandate that companies transparently inform customers about data collected both in-store, e.g., via loyalty programs or mobile app usage while on premises and online. Some retailers have introduced in-store technologies like smart mirrors and mobile checkout, which must also comply with personal data processing rules. Ensuring consistent privacy practices and consent management across physical and digital operations is now a legal necessity. Retailers with omnichannel presence often standardize privacy protocols enterprise-wide to avoid any gap that could result in regulatory fines or loss of customer trust. Labor and employment law. The drive to integrate e-commerce and physical retail has implications for employment practices and labor laws. As retailers pivot some brick-and-mortar staff towards roles in online fulfillment, like packing online orders from store inventory or handling curbside pickups, they must abide by labor regulations regarding job descriptions, working hours, and potentially even new union agreements. The introduction of robotics and automation in stores and warehouses raises questions about job displacement and retraining requirements, and some labor groups are pushing for regulatory measures to protect workers in this transition. Companies are engaging with regulators and labor representatives to ensure that their omni-channel strategies include equitable labor practices and workforce development, thereby preempting possible legal conflicts. Accessibility compliance. Offering a seamless shopping experience across channels also involves ensuring compliance with accessibility laws, like the Americans with Disabilities Act in the US and the European Accessibility Act. Retailers need to make both physical stores and online platforms accessible to people with disabilities, for example, providing screen reader-friendly websites and mobile apps, as well as ensuring that in-store pickup points meet accessibility standards. Legal actions in recent years have increasingly targeted online retailers for not meeting digital accessibility guidelines. The push for omnichannel presence thus must account for these legal accessibility requirements to be inclusive and avoid costly litigation or penalties. 8. E-commerce delivery race and logistics innovations. The race for ever faster e-commerce delivery is escalating as companies invest in high-tech logistics to meet customer expectations. Amazon, FedEx, UPS, and a host of startups are leaning on automation, AI, and unconventional transportation to speed up the last mile of delivery. In some communities, fleets of delivery drones and autonomous robots are moving beyond pilot programs and into operational use, delivering packages to consumers' doorsteps in a matter of minutes during trials. At the same time, retail giants are expanding their own logistics networks. Amazon's fulfillment and transportation services now ship a significant share of its packages, rivaling traditional carriers in volume. Other innovations include micro-fulfillment centers within cities to enable one-hour grocery deliveries, and crowdsourced driver networks that flexibly meet surges in demand. All of these advances aim to eliminate shipping delays and make next-day or even same-day delivery a standard feature of online shopping. One of the major logistical focuses is on developing sustainable and resilient delivery systems. E-commerce companies are overhauling their transportation fleets by electrifying delivery vehicles and investing in alternative fuels, seeking to cut costs and reduce carbon footprints. Amazon, for example, has deployed more than 30,000 custom electric delivery vans across the U.S., part of its pledge to have 100,000 EVs on the road by the end of the decade. These EVs have already delivered hundreds of millions of packages, showcasing how eco-friendly technologies can handle large-scale e-commerce logistics. Meanwhile, firms are incorporating advanced route optimization algorithms to minimize fuel use and delivery times. They're also strengthening supply chains by diversifying fulfillment center locations and using predictive analytics to stock goods closer to customers. The combined effect of these efforts is a logistics network that is becoming smarter, faster, and more efficient. Despite the excitement around speed and technology, the logistics race presents some concerns for companies and regulators alike. The cost of implementing cutting-edge delivery systems is significant, potentially affecting profit margins in the short term. Investors are carefully weighing these upfront investments against the long-term value of gaining market share through superior delivery offerings. Additionally, as companies push boundaries, there are regulatory and social challenges. Noise and safety issues around drone flights in urban areas, labor disputes with gig delivery drivers, and infrastructure strains due to increased delivery traffic. The fastest delivery guarantee is now a major competitive differentiator in e-commerce. Businesses that succeed in optimizing logistics stand to attract more customers, while those that lag may falter. However, achieving this requires balancing innovation with regulation and cost management, making the logistics revolution both an opportunity and a strategic challenge for the e-commerce sector. Legal and regulatory developments, logistics and delivery. Drone and autonomous delivery regulations. As drones and driverless delivery robots move from testing to real-world e-commerce deliveries, regulators are crafting rules to ensure safety. Aviation authorities like the U.S. Federal Aviation Administration, FAA, have been granting limited approvals for drone delivery services, but widespread deployment requires new regulations for beyond visual line-of-sight operations. Laws governing airspace use, altitudes, and drone certifications are being updated to accommodate commercial deliveries, while maintaining strict standards to prevent accidents. Similarly, cities and states are enacting rules for ground-based delivery robots, setting parameters on where and when they can operate. These legal frameworks are developing quickly to catch up with technological capabilities, and companies like Amazon, Alphabet's Wing, and others are actively working with regulators to shape policies that allow drones and robots to safely coexist with people and vehicles. Labor classification for delivery drivers. The surge in e-commerce deliveries has fueled debate over the employment status of gig economy drivers and couriers. In many jurisdictions, regulators and courts are examining whether delivery personnel working via platforms, for example, drivers for food delivery or parcel drop-off apps, should be classified as independent contractors or employees. Laws are being considered or implemented, such as California's AB 5 and similar proposals in other regions, that would extend labor protections like minimum wage, overtime, and benefits to more delivery workers. Some companies have responded by offering new benefits or guaranteed earnings floors to avoid legal conflicts. The outcome of these labor classification battles will influence the cost structure of last-mile delivery services and may spur further automation if human labor becomes more expensive under stricter regulations. Environmental standards for logistics. Governments are introducing environmental regulations that impact delivery logistics in e-commerce. Clean air regulations in cities are encouraging or mandating the use of electric or low-emission vehicles for last-mile delivery, with some urban centers considering zero-emission zones that only allow EV deliveries. The European Union and states like California have set future deadlines for phasing out sales of internal combustion engine vans and trucks, pushing courier companies and e-commerce retailers to accelerate adoption of electric fleets. Additionally, Regulators are working on packaging waste laws and recycling mandates, requiring e-commerce shipments to use sustainable or minimal packaging. E-commerce firms must navigate these green mandates, investing in compliance such as electric vehicles and biodegradable packaging to meet legal requirements and public expectations for environmentally friendly operations. Traffic and infrastructure regulation. The rapid increase in delivery van traffic in residential neighborhoods has led some local governments to consider traffic regulations targeting e-commerce. To manage congestion and road wear, cities are exploring measures like dedicated delivery zones or time-of-day restrictions for commercial deliveries. There's also growing discussion around charging e-commerce delivery levies to fund infrastructure improvements, akin to road usage fees for heavy delivery vehicles. Moreover, as grocery and food delivery companies experiment with rapid 15-minute deliveries, local authorities in some dense urban areas have moved to regulate dark stores and micro-fulfillment centers to ensure they comply with zoning laws and do not disrupt communities. For e-commerce logistics providers, adapting to these localized regulations is becoming part of doing business, requiring flexibility in delivery operations and collaboration with city planners. International shipping and customs compliance. Cross-border e-commerce deliveries face complex customs regulations that are continually evolving. New international agreements, for example, an updated framework under the UPU, Universal Postal Union, aim to modernize how postal services handle e-commerce parcels, including improving tracking and security. At the same time, customs agencies are tightening enforcement against illicit shipments, requiring e-commerce packages to have accurate digital customs declarations to speed clearance. Laws like the U.S. STOP Act mandate advance electronic data for international mail to help intercept illegal goods, such as counterfeit products or controlled substances. E-commerce retailers and their logistics partners must ensure compliance with these stringent customs data requirements, or risk delays and penalties that could erode the speed advantages of their cross-border delivery promises. Carrier competition and regulatory scrutiny. The rise of in-house logistics by e-commerce giants has not escaped regulatory notice. As Amazon builds out its own shipping capabilities, delivering goods for other businesses, and competing with carriers like UPS and National Posts, regulators are assessing if any anti-competitive behaviors could arise. Issues such as preferential treatment or undercutting shipping rates could potentially come under antitrust investigations if established carriers complain. Additionally, government regulators keep an eye on pricing practices in parcel delivery, for instance, ensuring that large players cannot leverage dominance in one area, like online retail, to unfairly advantage their delivery services. The legal environment is poised to maintain competitive balance in the parcel delivery sector, even as e-commerce platforms become significant logistics providers. Postal service reforms. Traditional postal services, often government-run, are adapting their legal mandates to remain relevant in the age of e-commerce. Laws are being updated to allow national postal carriers more flexibility in partnering with e-commerce firms and using technology for faster delivery. Some countries are adjusting postal pricing models and labor agreements to handle the flood of e-commerce packages and the decline of letter mail. In some cases, this includes legislative changes to allow deliveries on weekends or to utilize lockers and pickup points. These reforms ensure that postal networks, which are crucial for rural deliveries in particular, can continue to integrate into the broader e-commerce logistics web while meeting universal service obligations. 9. Sustainability in e-commerce and green initiatives. Environmental sustainability has become a key focus for the e-commerce industry, with companies and regulators alike pushing for greener practices in online retail and delivery. This week, a coalition of major e-commerce and logistics firms announced a joint initiative to achieve carbon-neutral shipping, pledging investments in electric delivery vehicles, renewable energy for data centers, and eco-friendly packaging. Sustainability is now a major driver of consumer loyalty in e-commerce. Surveys show that 1 in 3 shoppers globally will abandon purchases over concerns about unsustainable practices like excessive packaging or high carbon footprints. Leading e-commerce companies are responding by setting ambitious climate goals, many aligning with international targets such as achieving net zero emissions by 2040 under the climate pledge pioneered by Amazon and others. From online fashion retailers committing to recycled materials to electronics marketplaces offering trade-in and recycling programs, green initiatives are becoming central to e-commerce business strategies as both customers and investors demand accountability for environmental impact. A significant area of focus is the reduction of packaging waste and the shift to cleaner transportation in e-commerce. Retailers are redesigning packaging for online orders, eliminating single-use plastics and minimizing box sizes to cut down on waste. In the EU, upcoming regulations are expected to enforce higher recycled content in packaging and discourage overpackaging, prompting e-commerce businesses to innovate with compostable mailers and streamlined shipping processes. On the delivery front, companies are making record investments in electric vehicles, EVs, and alternative fuel fleets. For instance, Amazon has already rolled out tens of thousands of electric vans for deliveries across the U.S., aiming for 100,000 EVs in service by 2030 as part of its climate commitments. Likewise, European courier networks and retail delivery firms are adding e-bikes, drones, and electric trucks to cut emissions. The push toward greener logistics also includes optimizing routes to reduce fuel consumption and investing in carbon offset projects for unavoidable emissions. The emphasis on sustainability extends to upstream and downstream parts of the e-commerce supply chain. Brands and manufacturers are being encouraged or compelled by law to disclose their environmental impact, such as carbon footprints and sourcing of materials, on e-commerce product pages. This transparency allows eco-conscious consumers to make informed choices and fosters competition on sustainability credentials. Retail investors are increasingly incorporating environmental, social, and governance (ESG) factors into their valuations of e-commerce companies, rewarding those that demonstrate real progress on sustainability. However, companies face pressure to avoid greenwashing, making unsubstantiated claims about environmental benefits, as both consumers and regulators can penalize misleading statements. Overall, sustainability has shifted from a niche concern to a mainstream imperative in e-commerce, driving meaningful change in how products are packaged, delivered, and even produced. Legal and regulatory developments. Sustainability in e-commerce. Packaging and waste regulations. Governments are enacting laws to tackle the explosion of packaging waste from e-commerce deliveries. The European Union is moving forward with stricter packaging directives that will impose requirements on online retailers to reduce excess packaging and ensure that materials are recyclable or reusable. Some countries are considering taxes or fees on plastic packaging to incentivize eco-friendly alternatives. Additionally, extended producer responsibility (EPR) regulations in regions like Europe and parts of Asia will hold e-commerce companies financially responsible for the waste management costs of the packaging they introduce into the marketplace. E-commerce businesses globally are adapting by innovating in sustainable packaging design and working with suppliers to redesign packaging for minimal environmental impact. Carbon emission reporting. There is a growing push for mandatory climate impact disclosures from large e-commerce companies, paralleling initiatives in other industries. Regulators, such as the U.S. Securities and Exchange Commission (SEC) and the EU, under its Corporate Sustainability Reporting Directive, are moving to require detailed reporting on corporate greenhouse gas emissions, including those from supply chains and product deliveries, Scope 3 emissions. This means big e-commerce platforms may need to publicly report emissions from activities like shipping and returns. These transparency rules are intended to hold companies accountable and provide investors and consumers with insight into a retailer's environmental footprint. Noncompliance could result in legal penalties or investor backlash, motivating e-commerce companies to actively measure and reduce their carbon emissions to meet these regulatory expectations. Green shipping and fuel standards. E-commerce reliance on shipping and logistics means environmental regulations in transportation directly affect the sector. International and local laws are setting emission standards for delivery vehicles and shipping. For example, new EU regulations incorporate maritime shipping into carbon trading schemes, and the US and European regulators have proposed stricter fuel efficiency and emission rules for commercial delivery trucks. These legal moves push e-commerce and logistic companies to switch to cleaner energy, such as electric vehicles or possibly hydrogen fuel cell trucks. sooner than they might have planned. E-commerce firms are advocating for supportive policies, like expanded charging infrastructure and renewable energy incentives, to help meet these regulations. The collaboration between industry and regulators on green logistics policy is likely to intensify as deadlines for emission reductions approach. Eco-labeling requirements. Some jurisdictions are considering mandatory environmental labels on products and in online listings, indicating, for example, the carbon footprint or recyclability of items. In the EU and parts of East Asia, new proposals would require companies to substantiate any eco-friendly claims to combat greenwashing, and possibly to display standardized sustainability scores for certain products like electronics or apparel. E-commerce marketplaces will need to provide mechanisms for sellers to include this information and may be held liable for unverified claims on their platforms. Such regulations aim to empower consumers with clear information and ensure that environmental marketing in e-commerce is accurate and useful. Fashion and waste laws. The fast shipping and returns culture of e-commerce, especially in fashion, has led to concerns about large amounts of waste and unsold products. France has already passed laws banning the destruction of unsold, usable consumer goods, forcing e-commerce retailers and brands to find ways to recycle or donate returned items rather than send them to landfills. Similar legislation is being eyed by other European countries and states. Moreover, there are calls for laws to curb ultra-fast fashion's environmental harm, potentially through import restrictions or higher tariffs on products from companies that generate excessive waste. E-commerce clothing and lifestyle retailers are thus under legal and public pressure to adopt more circular practices, such as resale platforms or sustainable material use, in order to mitigate their environmental impact. Renewable energy and data centers. E-commerce is also an energy-intensive industry due to large data centers and cloud computing needs, which support websites and AI algorithms. Various clean energy regulations and carbon pricing schemes indirectly impact e-commerce companies, pushing them to invest in renewable energy for their data centers and offices. Many of the largest e-commerce and cloud providers have committed to running their data centers on 100% renewable energy within the next decade. In some areas, local regulations now incentivize or require large warehouses and fulfillment centers to install solar panels or meet green building standards. These policies dovetail with corporate sustainability goals, leading e-commerce companies to pursue LEED-certified facilities and renewable power purchase agreements to ensure compliance and demonstrate environmental responsibility. Environmental reporting and investor activism. Legal obligations aside, publicly traded e-commerce companies also face pressure from shareholders and environmental activists to improve their sustainability profile. Investor groups are filing shareholder resolutions and sometimes litigating to compel companies to set emissions targets or reduce waste. In some cases, this has led to voluntary agreements or public commitments that go beyond what laws currently require. Regulators are increasingly supportive of such transparency. Certain stock exchanges and financial regulators are exploring mandatory ESG disclosures. E-commerce companies now recognize that ignoring sustainability can invite not only regulatory action, but also reputational risk and confrontations with investors and advocacy groups. 10. New entrants and e-commerce startup ecosystem thrives. The e-commerce landscape is witnessing a surge of new entrants and innovative startups shaking up the status quo, even as the market consolidates in some areas. In recent news, fast fashion phenomenon Shine and bargain marketplace Temu, both born out of China's digital economy, continue their explosive global growth, challenging established players worldwide. Shine, known for its ultra-fast fashion model, has amassed tens of millions of customers globally and is reportedly gearing up for a major IPO, albeit at a reduced valuation of around $50 billion after facing investor concerns and regulatory scrutiny. Temu, an offshoot of Pinduoduo, has rapidly expanded overseas by offering rock-bottom prices on goods shipped directly from Chinese manufacturers, putting pressure on Western competitors. These upstarts leverage aggressive social media marketing, influencer partnerships, and agile supply chains to capture consumer attention and wallet share. Their success underscores how the e-commerce startup ecosystem is thriving, fueled by venture capital and the promise of tapping into niche markets or cost disruptions. Beyond these headline-grabbing giants, countless e-commerce startups worldwide are finding opportunities in specialized niches and new technologies. Entrepreneurs are launching online marketplaces tailored to specific interests, ranging from sustainable products and secondhand fashion to local artisanal goods, proving that consumers are eager for curated and community-driven shopping experiences. The pandemic-era shift to digital commerce has lowered barriers for small businesses to find national and even international customer bases through online storefronts, boosting the ranks of direct-to-consumer (D2C) brands. Investment in e-commerce startups remains strong, as evidenced by numerous funding rounds well into 8 or 9 figures, highlighting investor confidence in the sector's growth potential. The widespread adoption of enabling tools like Shopify for quick website setup or fintech solutions for online payments has further empowered this new wave of merchants and middle-sized platforms. This vibrant e-commerce startup scene is injecting fresh competition and innovation into the industry, but it also arrives in a challenging environment. New entrants must not only attract customers in a crowded digital marketplace, but also navigate supply chain complexities and compliance requirements right from the start. Incumbent giants often respond to promising newcomers through acquisitions or by replicating their features, which can sometimes transform a startup success into a buyout scenario. Antitrust regulators are watching these dynamics carefully to ensure big companies do not stifle innovation by simply absorbing every rising competitor. Despite these challenges, the presence of agile new players is generally welcomed by consumers and investors alike. They bring more choices, often more competitive pricing or specialized products, and they push the whole e-commerce sector to continually evolve. In the long term, a healthy pipeline of startups helps ensure that e-commerce remains an innovative and consumer-responsive industry. Legal and regulatory developments, e-commerce startups, and new entrants. Intellectual property battles among new entrants. With fierce competition, e-commerce startups sometimes find themselves in legal disputes over intellectual property rights. A notable recent case involves two Chinese-founded fast fashion rivals. Shein has taken Temu to the High Court in London, alleging industrial-scale copyright infringement of over 2,000 product images used on Temu's platform. The lawsuit highlights that even newer e-commerce players must respect IP laws and that the traditional brand protection battles now extend to digital-first companies. Courts in major markets are ready to hear cases against online retailers accused of copying designs or content. Such legal entanglements can slow down a startup's expansion and force it to alter practices, showing how IP compliance is crucial for sustainability of new e-commerce business models. Regulatory scrutiny of ultra-low-cost models. Some disruptive startups are drawing their own regulatory attention due to their novel and sometimes controversial business models. Companies like Shein and Temu, which rely on shipping low-cost goods from overseas directly to consumers, have been accused of exploiting trade loopholes to avoid tariffs and standards. In response, the U.S. government recently introduced new rules to restrict the de minimis import exemption that allowed these platforms to ship products under a duty-free threshold. This legal change forces such e-commerce firms to adapt their logistics strategies and pay appropriate customs duties, putting them on a more equal footing with domestic competitors. Regulatory scrutiny is also intensifying around their supply chain practices and compliance with labor and safety standards, ensuring that cost-cutting doesn't come at the expense of legal and ethical obligations. Data security and foreign apps. The meteoric rise of international e-commerce apps has led to concerns about data security. In various countries, lawmakers are examining whether apps like Shein and Temu adequately protect user data and whether they might pose national security risks due to their foreign ties. While no specific bans are in place, unlike some actions taken against other social media apps, politicians in the U.S. have called for reviews of these companies' data practices and even suggested that they might be required to establish local data centers or partnerships to continue operating. This is part of a broader trend where e-commerce startups from certain jurisdictions may face additional legal scrutiny abroad, and they are proactively increasing transparency about their data practices to ward off potential restrictions. Access to capital markets and IPO regulatory hurdles. E-commerce startups looking to go public encounter complex regulatory environments. For instance, Shine's anticipated IPO has involved navigating securities regulations across multiple jurisdictions. Originally eyeing a U.S. listing, the company reportedly shifted to pursuing a Hong Kong or London listing amid U.S.-China tensions and stricter auditing requirements for Chinese-based firms. Regulators in various markets require comprehensive disclosures, compliance with accounting standards, and oversight of foreign company listings. Startups must ensure their financials and corporate governance meet these standards. Moreover, countries like the U.S. have passed laws, such as the Holding Foreign Companies Accountable Act, that can delist foreign companies from U.S. exchanges if they don't comply with audit inspections, which is a factor for Chinese e-commerce firms eyeing U.S. investors. Ultimately, regulatory compliance in capital markets is a pivotal aspect of a startup's ability to secure funding and expand globally through public offerings. Competition law and predatory pricing. Regulators remain vigilant that large e-commerce players do not use predatory pricing or anti-competitive tactics to thwart new entrants. If a dominant company slashes prices below cost to push a startup out of the market, that behavior could prompt investigations or lawsuits under competition laws. For example, e-commerce sectors like online groceries and food delivery have seen accusations of unsustainable pricing tactics aimed at winning market share. Competition authorities in multiple countries have frameworks to intervene if such behavior crosses into illegal anti-competitive territory. This oversight serves as a protective measure for emerging companies that bring innovation to the sector, ensuring they have a fair chance to compete without being crushed by incumbents' deep pockets. Global small business empowerment. On a more positive note, some legal frameworks are being adjusted to support small and medium enterprises, SMEs, in e-commerce. International trade agreements and national export promotion policies are increasingly including clauses for simplified customs procedures and reduced fees for small export shipments, acknowledging the role of small e-commerce sellers in global trade. Additionally, initiatives by governments and organizations like the WTO's e-commerce talks aim to create clearer, more conducive rules for SMEs to sell online across borders. By lowering regulatory burdens and providing support for compliance, these measures help more startups and small merchants participate in e-commerce, thereby fostering greater competition and innovation. Consumer law and new business models. E-commerce startups that introduce new business models often face questions about how existing laws apply to them. Models such as subscription boxes, social selling networks, or innovative digital marketplaces must comply with established consumer laws on disclosures, cancellations, and returns. Regulators have issued guidance on aspects like automatically renewing subscriptions, requiring clear consent and easy cancellation, and satisfaction guarantees in D2C sales. Moreover, if a startup operates in a niche like telehealth products or food deliveries, it might need to navigate additional sector-specific regulations, health privacy laws, food safety standards, even as an online platform. Early on, startups are learning to integrate legal compliance into their growth strategies, recognizing that in the long run, meeting regulatory standards is essential to avoid fines and to gain consumer confidence. Video description. In e-commerce news today, 10 major developments reshaping online retail. We dive deep into the top 10 stories dominating the e-commerce world today. This comprehensive news report covers everything from surging global online sales and cutting-edge innovations by industry giants like Amazon to the meteoric rise of social commerce on platforms like TikTok. We explore how artificial intelligence is transforming the shopping experience, how traditional retailers are evolving through omnichannel strategies, and how startups like Shine and Temu are challenging established players. Each segment also examines the legal and regulatory angles, new antitrust battles, consumer protection laws, data privacy rules, and sustainability regulations that are shaping the future of e-commerce. Tune in to understand the latest trends, market impacts, and the evolving rules of the game in the online retail sector, all delivered in a detailed, engaging news-style analysis. Join us as we break down the key developments and insightful analysis behind each headline. Learn how global e-commerce is reaching record heights, how big tech is adapting to new regulations in Europe and the US, and how innovations in AI and logistics are setting the pace for the industry. We also shed light on the important legal frameworks emerging around e-commerce, from privacy laws to environmental initiatives that ensure this digital marketplace grows responsibly. Whether you're an e-commerce professional, an investor tracking the retail sector, or a curious consumer, this in-depth report provides the knowledge you need to stay informed in the fast-paced world of online commerce. Disclaimer: the content in this video is for informational purposes only and should not be taken as legal, financial, or official advice. Tags: e-commerce news, online retail, digital commerce, Amazon, Alibaba, e-commerce trends, e-commerce regulations, social commerce, influencer marketing, artificial intelligence, online shopping, retail innovation, digital economy, omnichannel retail, last-mile delivery, e-commerce startups, sustainability, tech news, global markets, e-commerce law. Base thumbnail concept: a dynamic and eye-catching thumbnail that immediately signals e-commerce news and the breadth of topics covered. The background features a globe or world map overlaid with digital shopping icons, like a shopping cart, package, drone, and social media icons, to represent the global nature of online retail. Prominently displayed text reads, "E-commerce news today" in bold, modern lettering, emphasizing today to highlight the timely content. Small images or silhouettes of a delivery van, a smartphone, and a shopping bag are arranged around the text, hinting at various aspects of e-commerce, logistics, mobile shopping, retail. The color scheme uses a mix of vibrant tech blues and energetic yellows or oranges to grab attention, conveying urgency and relevance. Overall, the thumbnail's visual elements and text communicate that this is a comprehensive news update on the e-commerce industry's biggest trends happening now. Thumbnail variation A. Focus on a breaking news motif. The thumbnail resembles a news broadcast graphic, with a bold red "Breaking News" tag at the top. Underneath, the title "E-commerce news today" appears in white text on a dark blue or black bar, simulating a news ticker. The imagery includes a split-screen collage. On one side, an Amazon warehouse or delivery drone in action. On the other side, a smartphone screen showing a social media shopping post. This split design emphasizes the dual nature of e-commerce, logistics, and digital storefronts, and adds a sense of immediacy and diversity of content. The overall vibe is urgent and authoritative, making the video look like a must-watch update for current e-commerce happenings. Thumbnail variation B. Highlight a human and tech element together. The thumbnail features a close-up of a person tapping a Buy Now button on a smartphone, superimposed over a background of a busy warehouse with moving conveyor belts or robots. The title text "E-commerce today, Top 10 Stories" is placed in bold at the bottom, using a mix of bright orange and white text on a clean dark overlay for high contrast. The human hand and smartphone signify the consumer angle and relatability, while the warehouse background hints at the high-tech logistics aspect of e-commerce. This combination can appeal to viewers by connecting the everyday experience of online shopping with the behind-the-scenes innovations making it possible. Thumbnail variation C. Emphasize the legal and trend-setting angles. The thumbnail is divided diagonally. On one half, an image of the scales of justice or a gavel overlays a background of a computer code or digital padlock icon, representing the regulatory and data privacy topics. On the other half, a dramatic upward arrow on a stock chart and shopping bags signify the industry growth and stock market impact. Across the center, bold text states "E-commerce, big news and trends," with the word "today" highlighted or given a different color, e.g., red or yellow, for urgency. This design appeals to a more analytical audience, signaling that the video will cover not just cool new trends, but also important legal and financial aspects of e-commerce news.